Yeah, markets, of course, reacting to the Fed decision to keep rates unchanged. The Fed chair, of course, saying the economy continues to strengthen despite the recent rise in COVID infections. Taking a look at the major indexes at this hour and in this moment, we see the Dow improving a bit, although it's technically still down fractionally, less than 0.1% at the moment. The Nasdaq popping a bit after Fed Chair Jerome Powell started his conversation answering questions during this latest conference. The Nasdaq up around 0.8%, and the S&P 500 also up a little bit more, around 0.2%. Kristen.
And Alicia, let's turn to the meat of this. Fed Chair Jerome Powell also noting that the Fed will be ready to act if inflation runs too high, but still sees the increase in inflation largely as transitory due to supply chain bottlenecks and port congestion. Well, our own Alex Vuocolo here at Cheddar has been monitoring all of these headlines, including Fed Chair Jerome Powell's press conference. Alex, it's good to see you. Look, the biggest takeaway from, for me at least, is that nothing is happening until this job market improves. And that is the biggest concern for the Fed right now. We need to see a better jobs market. What's your reaction?
Hey, Kristen, as you said, I think many people expected the Fed today not to do anything too significant. Interest rates are being kept at near zero and asset purchases are continuing as before. What people were looking for today was some signal of when the Fed might start tapering down the line. And there was a specific quote in the statement today that gave us a sense that going forward in the next upcoming meetings, the Fed will be keeping an eye on the data and potentially beginning a tapering process. But again, right now, nothing is certain. We're looking really at that September and even possibly that December meeting for anything concrete.
Alex, what sort of expectation did Powell provide in terms of inflation being transitory? We know that he mentioned, it at least one time really early on into the press conference, especially when we think of if this proves to be more long term, what's the Fed's action?
Powell was once again kind of stuck to his guns when it comes to inflation being transitory, but he did say they would be keeping an eye on the data, and that if price stability is one of the Fed's primary goals, and if it proves that the current inflation is more persistent, they will respond to it. But again, he's looking much more longer run than the recent bumps that we've seen.
It's interesting, Alex, what's changed in the past 6 weeks since the Fed last met, of course, is rising COVID cases, concerns about the Delta variant, not enough vaccinations. And of course, the Fed chair was asked about this Delta variant. Talk to us about the message that he sent and why he's not necessarily as concerned from an economic standpoint as we progress through the coronavirus pandemic.
As our prior guest noted, really, he did not deny that, of course, the Delta variant is going to have serious health consequences. But when it comes to the economy, he stressed that successive waves of COVID have had less and less of an economic impact, whether that's him just being cautious and holding out for more data, or if he truly believes that, as we proceed, the economic impact of newer variants will be less. It's hard to say. But for now, he's taking a more cautious stance there.
We know the Fed's press conference is still underway, but I wonder, what question do you feel remains unanswered that the Fed will need to really provide more guidance on in the months ahead?
Well, with Powell continuing to emphasize that we are not at the goal of maximum employment, I think the big question is, what is maximum employment? And in the Q&A, Powell was asked, what does this mean to you? And I think once again, he provided an answer that was a little difficult to parse. He basically noted that he's looking at multiple data streams, things like labor participation, obviously the unemployment rate. So altogether, I think we really have to have a better understanding of what maximum employment is to the Fed to understand when and how they will begin to taper.
And we did get some confirmation, Alex, of course, from the Fed that it's ideally going to happen that the taper, these bond purchases, will fully end. $120 billion worth of bond purchases that it makes on a monthly basis before higher interest rates ensue. In terms of what you're seeing, this clarification around policy, that does seem to be benefiting the markets. What's your take?
I think right now the one maybe takeaway is that a lot of people are beginning to see a question whether or not the different types of asset purchases will begin to split off. The two main ones are they're purchasing treasuries and they're purchasing mortgage-backed securities. With the housing market being as hot as it is, there is some speculation that the Fed could cut its asset purchases in that area before it does so in treasuries. But at this point, Powell has kind of held off on saying one way or the other.
All right. Well, I think we got to get used to higher prices here, at least in the near term. Alex Vuocolo with Cheddar. Thank you so much, Alex, for joining.